Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Investors await the high-stakes U.S. consumer price inflation data that could undermine the Fed's enthusiasm for rate cuts. JPMorgan's head of APAC equity research, James Sullivan, will be joining us to explain why he sees inflation as the top global risk to watch. We speak with Cambodia's central bank governor on how the economy is absorbing the 19% tariffs from the U.S. and what more can be done to soften the impact. President Trump orders U.S. flags at half-mast after conservative activist Charlie Kirk is killed at a Utah campus event. We examine Kirk's significance to Trump. Here's a look at the Asian trading session as a mixed bag for Asian equities with some notable moves in tech. TSMC extending gains at a record high after reporting a 33% jump in August sales. We're also keeping an eye on Alibaba as a Chinese tech giant looks to raise more than $3 billion through a convertible note issue. That's the biggest deal of its kind so far this year. Next up for markets will be August inflation data due later. Traders will be watching the data closely with an eye on next week's Fed rate decision. An unexpected drop in producer prices overnight, soothing fears a higher inflation reading may keep policymakers on pause. While our next guest thinks an upside US CPI surprise is likely to have a limited impact on the odds of a Fed rate cut. Let's get insights from James Sullivan, head of Asia Pacific equity research at JPMorgan. James, so that cut in September is a gimme. It's a 25?
So first off, good morning. Thanks very much for having me on the program. Great to see you again. So a couple of different ways to think about rates and inflation at this stage. The market's currently pricing in 100% odds of a 25 basis point rate cut, only about 8% odds of an outsized 50 basis point rate cut. The key concern, obviously, is the CPI print that's going to hit shortly. JPMorgan, along with most market participants, are focusing on something in the area of 3.1% on a year-on-year basis. The critical aspect, as you hinted at in the promo, though, is the Fed has been very clear. They have a dual mandate, as we all know, full employment balanced off of against inflation. The current chairman has made very clear that at the moment they're far more focused on the jobs numbers than they are on the inflation numbers. And so even if you get an upside surprise in the inflation print, JPMorgan forecasts are that the Fed will effectively look past that and focus primarily on the jobs numbers, which have continued to be weak, as we've seen.
James, why isn't a cut an alarmist response? If you take a look at the U.S. economy, it is still resilient. The lending rate is still, I don't know, not restrictive perhaps, and also the financial conditions are still loose. I mean, why do we need this cut right now?
So the challenge from a macroeconomic perspective is the weakness that we're seeing in the jobs front, but also critically in industry capex, which is effectively hidden by this massive surge in artificial intelligence-related capex, close to $1 trillion this year across the mega cap U.S. tech stocks. That's hiding a lot of weakness under the covers in the non-AI space. All of that is triggered by policy uncertainty, not by broader macroeconomic or funding conditions. And so we're in a situation analytically to some degree similar to COVID, where the stresses that we're seeing in the numbers are not being triggered by standard pressures, and therefore standard responses may not be the most appropriate. And so it really creates a challenge for the Fed. It's one of the reasons why we think they've continued to stick by this mantra of sticking with the data, sticking with the data. And at the moment, the data that they're most clearly focused on is jobs rather than inflation.
You touched on AI. AI, of course, has been driving the rally that we've been seeing on the S&P. I'm just wondering, what might this cut mean, or has it been factored in already when it comes to that AI rally?
I don't think it impacts the AI stocks much at all, and it's actually a very particular set of equity markets that we're looking at on a global basis. The U.S. Is up over 30% since the April lows, which is the best performance in a very long time outside of a recession. Almost all of that has been the Mag 7 or the big AI stocks. You're now at a stage where 43% of the market cap of the S&P is driven by AI. All of the margin expansion that you see in the numbers is being driven by AI. And so it's really a singular focus that we're seeing. However, if you put that into context of global equity markets, it's actually been the weakest relative start for the U.S. market relative to global markets since 2009. So at JPMorgan, we're still very focused on weak dollar, accelerating international growth, and emerging market and outperformance, in particular here in Japan. I'm in Tokyo at the moment.
How about the AI play in Asia? We're suddenly seeing that in China, and we're seeing a red-hot market right there.
And you're very clearly seeing support from the central government for independence or self-sufficiency in that space, and that really goes across the entirety of the ecosystem. I think one of the very clear differences that we see in China and several other Asian nations relative to the strategies that are being deployed in the U.S. The U.S. is all about massive data centers, massive power infrastructure, and the largest amount of training data sets possible, massive amounts of chips deployed in those data centers. China in particular has taken a slightly different approach, and instead of bleeding edge, has really focused on implementing good enough models and driving productivity in the economy today. And so we are seeing slightly different approaches. Both require investment, and the support that we're seeing from the central government into that space across the China-defined ecosystem, separate and distinct from the U.S.-defined ecosystem, as you very rightly say, has driven performance, and we think will continue to moving forward. Particularly relative to the view on the China equity market in general, is this anti-involution, horrible term, but very significant impact on markets. The key takeaway from the second quarter earnings print was reasonable top-line growth, absolutely swamped by margin compression. Since July, we've seen a very, very meaningful turn in the macro statistics coming out of the Chinese economy, sector by sector by sector, and we do think that that will also support market performance in China as we look into the second half.
So in terms of earnings, because that's one gauge that people are looking at, how much clarity, how much confidence is there in terms of earnings in Chinese companies? If you take a look at the Q2 numbers, I mean, top line was 6% growth, but if you take a look at the other fine print, you may not be that confident.
And it's important to recognize and look at the high-frequency data. And so as you very rightly say, 6% top-line growth, you saw a very significant increase in costs, which led to effectively zero bottom-line growth. If you go industry by industry, however, you're starting to see significantly better polysilicon pricing from July. You're seeing significantly less auto discounting. You're seeing logistics ASPs up 9% since July. And so really across the board on a multi-sector basis, we're seeing very real impact from the Chinese government's focus on this anti-involution concept, which is effectively saying we have oversupply in a lot of industries. That's driven severe cost competition. That's driving deflation for the overall Chinese economy, which is obviously not good from a macroeconomic perspective, but it's also destroying margins across the various sectors that we look at. From July, those statistics have significantly changed. That's driving outperformance in China, and we think that that will continue.
It is a positive market environment, and Alibaba obviously tapping the market to fundraise. I'm just wondering if you see other big tech companies doing the same. Is this a great opportunity for them to do that?
So, Haslinda, the obvious answer would be the absolute explosion of activity that you're seeing in the Hong Kong equity markets. You're seeing significant fundraising across the board, primarily from mainland Chinese companies coming back to Hong Kong. It's interesting because you did have a lot of prognosticators, to some degree, calling Hong Kong out of the game. That's clearly not been the case, as you've seen this resurgence of mainland Chinese listings through the HKEX and other listings in Hong Kong. So
what's the outlook? How do you play it? How best to position?
So we're still very positive on emerging markets in general. Here in Asia, we continue to be overweight India. We're positive here in Japan. We see select industry plays in China after a period of outperformance. Really, the critical thing that we're looking at on the other side of the equation, however, are significant baked-in structural inflationary pressures across the board in many markets. You have very significant government debt levels coming out of the COVID stimulus packages. Paired with that, you see rising deficit spending in a lot of economies. And so we have to recognize that governments are incented to run inflation hot to try to inflate away these very large debt piles that we have. To the degree that that results in political pressure on central banks, not just here in Asia, but increasingly in developed markets, that could result in an asymmetric risk where inflation runs hot for an extended period of time. And that's really something that we're trying to watch very closely.
You just mentioned India. You're liking that economy, that market really well. How much of that has to do with that GST tax cuts that's just been announced?
It definitely matters. I would argue that you've seen a series of government efforts over the course of the last couple of months to ease the burden on the consumer. And one of the key elements that we're watching in the India market is this potential for a significant inflection point, particularly for rural consumption across the Indian market. We have to play India somewhat selectively, given the high valuations there. And so from a sector by sector perspective, we are trying to be pretty specific. If we look across the rest of the major markets in Asia, it's a somewhat similar story. In China, we're far more leaning into materials and industrials on the anti-involution trade rather than a broad view on the market as a whole.
I want to look forward, James. A colleague of mine just talked about this 52-week high club for the U.S., and we have Alphabet, Broadcom, Micron, and for the 52-week low club, it's consumption plays at the bottom, Colgate, Dr. Pepper. If you take a look at the next 52 weeks, what would your bets be?
Look, the critical component of the view on the U.S. is really this concentration of performance among a very limited number of artificial intelligence-related stocks. As a result of that outperformance, you have a U.S. market that's trading at over 22 times earnings. That's at decades-long record levels of premium relative to the rest of the world. To put that mathematically, you're sitting at a 95 to 97th percent level relative to the rest of the world. And so that really drives our neutral view on the U.S. and the overweight that we have on emerging markets. Within the U.S., we are looking at the potential risks of rising tariff pass-through, which is resulting in this weakness in the consumer-related spending stocks, as you very rightly highlighted. The critical component here is really going to be corporates putting numbers to productivity gains being driven by AI. We've seen a couple of scares in the marketplace on a year-to-date basis. We need to see more solid evidence that AI is driving productivity gains and margin upside across broader corporate America. We don't have proof of that yet. We have significant hope, and that's embodied in the 22.5 times earnings that's applied to the U.S. market right now.
James, always great to have you on the show. James Sullivan, head of Asia Pacific Equity Research at JPMorgan. Now, UBS CEO Sergio Ermotti says we haven't seen the true impact of President Trump's tariffs. He spoke with us exclusively in a wide-ranging interview and warned tech advancements will change the banking sector.
It's fair to say that also this time probably there is an exaggeration of the estimation, but is going faster than what we saw in the past. But I'm pretty convinced that we are still underestimating the impact it will have over the long term. I think that for us is all about really preparing for the future. The biggest focus we have right now is how to make our processes more efficient on the back end, but also how can we help our client advisors serving their clients in a more effective and efficient way, our analysts to be more responsive to market changes. And one point is very important. Technology will help humans being better, and in banking we will continue to see the emotional part, the EQ part of the equation playing also a very important role.
The bank has been around through many cycles. I want to get your sense of this current macro environment. I mean, we went into this year with some expectations around how the macro environment would change. And then we had this flurry of tariffs and this back and forth, and now questions around how much the Fed can, in fact, lower interest rates. What's your sense of the global economy, and where do you think we will be in 6 months' time? Are we going to be better off or worse off?
Well, look, the issue is that I don't think we have seen really the true impact of tariffs playing out in the economies. Of course, when you look at Asia and China in particular, it's fairly robust. 5%, comfortably about 5% GDP is quite a strong momentum. And of course, also China may be impacted by high tariffs, but on the current assumptions, around 40%, considering also that the weighting of tariffs for exporter has changed. In 2017 was probably around 20% of the exports were going to the U.S. Now we are closer to 14%. Of course, when you look at machinery, autos, and technology, there is between 40 and 80%. But what's going on, for example, in this region, diversification, it's a very important topic. So you see Asian becoming much more, developing more into a diversified play. Same is going on for in Europe. The true issue on tariffs will be seen on consumers. In the U.S., we will need to see exactly if there is an inflationary aspect of tariffs.
UBS CEO Sergio Ermotti speaking exclusively with the China Show co-anchor David Inglis. And stay with us for an exclusive interview with Citi CEO Jane Fraser on Horizons Middle East and Africa. Watch out for that at these times on your screen. Well, still ahead on Insight, authorities search for the killer of U.S. conservative activist Charlie Kirk after he was shot at an event in Utah. We discuss his relevance to President Trump and the conservative movement in America. Keep it here with us. This is Bloomberg.
It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree day after day, year after year, in the most hateful and despicable way possible.
President Trump reacting to the death of conservative activist Charlie Kirk, who was fatally shot while speaking at a Utah University event. A search is still underway for the killer. Kirk's shooting, the latest in a spate of political violence in the U.S., drew an outpouring of shock and condemnation from Republicans and Democrats alike. Now, President Trump has ordered U.S. flags be lowered to half-staff through Sunday evening to honor Kirk. Bloomberg News Desk editor Balazs Pans joins us with more on who Charlie Kirk was and his relevance to Trump. Balazs, even this morning I heard colleagues asking, who is Charlie Kirk? Who is he?
Well, Haslinda, it's clear that Charlie Kirk was someone who's very important to especially President Trump. We know from reports that the president kept very close tabs on the events as they were unfolding from the very first reports of this shooting in Utah. And he issued the statement that we just saw, and he ordered U.S. flags to be lowered to half-mast, which shows how important he has been to the president. He was friends with several people in President Trump's inner circle. He was somebody who stuck with President Trump even after the 2020 election defeat, which certainly strengthened their relationship. But his influence went even further than that. Charlie Kirk was only 31 years old, and he's been active in politics since he's been a teenager. He built Turning Point USA up from an activist organization which was involved not just in activism but also in turnout the vote efforts and crucially youth engagement, and turned into a quite powerful lobbying group. So that shows how important and how crucial he has been in the president's connection with young voters, especially a demographic that has become increasingly important to the president's coalition.
To your point, some call him the youth whisperer of the right wing, that he played a huge role in garnering the youth support. How important was that in Trump's election?
Well, even beyond his role in organizing and sort of turning out the vote, he was one of the most important online faces of the MAGA movement. He was somebody who had a connection, according to President Trump, to the young people in the United States, somebody who was obviously able to reach out and sort of grab their attention. One of the things Charlie Kirk was very famous for is that he enjoyed the debating people from the other side. He was often described as a firebrand, someone who was pugnacious, someone who enjoyed that back and forth, which is certainly something that grabs the attention of young people, that does well on social media, that does for good video content. So he was someone who really had his finger on the pulse of a lot of, or a large portion of the young people in America. So he served a very important role in that connection between the president and his youngest voters.
He is the founder of Turning Point. Could you shed some light on what it does?
Yeah, Turning Point started out as a very small organization. Charlie Kirk started it when he was just 19 years old, and it's grown into this sprawling activist, lobbying, fundraising organization. President Trump actually credited Charlie Kirk and, by extension, his organization with helping turn last year's election. Especially Arizona was one state that he singled out. So it definitely seems like Charlie Kirk was able to build an organization that was powerful even beyond the media sphere, even beyond just an online presence, but something that had very strong on-the-ground organization and a real effect on the election itself.
Balas, we know that the motive is unknown yet, investigation still ongoing, but some people are already talking about the rise of political violence in the U.S. Trump himself escaped 2 attempts to his life. How concerned are we about that?
Well, the president himself sounded very concerned, and that was the reaction from across the political spectrum as the news unfolded. You're right, it's hard to escape the sort of memory of the assassination attempt on the then candidate Trump, but also all the political violence that has unfolded in the U.S. since. There was the Minnesota case of Democratic lawmakers being targeted. There was the case of Pennsylvania Governor Josh Shapiro's surviving an arson attempt on his home. So certainly the conversation will turn toward the rise of political violence in the U.S., and that's going to be a concern going forward.
What are we looking out for next? What action might be taken by the Trump administration on the back of this?
Well, I think the first thing to keep an eye on is the criminal case and the search for the perpetrator. Obviously, this is a very high-profile case, and FBI Director Kesh Patel himself is keeping very close tabs on the investigation. As far as we know right now, there's a manhunt still underway. They are looking for the prime suspect. They have had certain people in custody whom they have released since then. These investigations tend to go this way. They grab people that they think might have something to do with the case or might have some information, and the search continues. So that's going to be the first thing. But the political debate will be very, very interesting to observe.
Balas, thank you so much for the update. Bloomberg News Desk Editor Balas Pence there. Still to come, we speak exclusively with the governor of the National Bank of Cambodia as U.S. tariffs weigh on the economy. That's next. This is Bloomberg. Welcome back. You're watching Inside. We're counting down to Japan coming back from its lunch break. Of course, the Nikkei 225 currently up about 1%. BOJ front and center. Those watchers expect a hike by January, but 36% touting October. It remains the most popular pick for the timing, but the percentage favoring that month slipping to 36% from 42% in the previous survey conducted after the July policy meeting. Nikkei 225 in positive territory, up about 1% right now. Well, Nissan has welcomed the US and Japan reaching a deal to reduce tariffs on vehicle and parts imports to the United States. But challenges remain in managing those levies alongside a costly business turnaround plan. CEO Ivan Espinosa spoke exclusively with us about the impact of tariffs and the progress of his restructuring efforts.
We welcome the improvement from the 25% to the 15%, but as you rightly said, it's still higher than what we were operating with. And what we're doing is continuing our efforts. On one end, we are focusing our marketing efforts on tariff-free products. So we have two big manufacturing sites in the in the United States, where we produce many Nissan products: Pathfinder, QX60, Infiniti. We produce Murano. We produce our front-rear pickup, Nissan Altima. So we have enough product to sell to our customers tariff-free, and this is where we're focusing our marketing efforts. On the other end, we are also continuing our efforts of resourcing some components to improve the tariff impact that we're receiving from some suppliers and tier end supplier impact, and we will continue the efforts moving forward.
Does that mean that you won't necessarily need to raise prices, and does that improve the demand outlook for the U.S.?
Well, we're keeping a close eye on what's happening in the pricing, and we will take any opportunity that we see coming. Nissan we are having a very quick follower strategy on pricing, so monitoring what our larger competitors are doing, and we will take opportunities as we see fit.
The Chinese market, very competitive. How are you faring, and what's the strategy there?
Well, we see, I would say, a prudent improvement, or what I will call we have prudent confidence. This is how we're qualifying it, because we have 3 months of year-over-year sales growth. We just launched our N7, which is a new energy vehicle that was designed, engineered, and is produced in China. And this car is helping us drive the performance up. So we have, as I said, 3 months year-over-year growth, and that's why we are prudently confident, because the performance is good. The market is very difficult, as you said, so we cannot, say we are already out of the woods. We still need to continue working, but we have more cars coming in the pipeline, cars that were produced, designed, and engineered with the Chinese customer in mind, and we're confident that they will keep us driving the success forward.
How are you doing on your funding plans? We understand that you are trying for 1 trillion yen when it comes to debt and asset sales. How much progress have you made?
Well, we raised recently around 850 billion yen already. So what I would say is that we are very well in track on the funding. This gives us a lot more breathing room to keep working on the Nissan plan, keep improving our performance, and we have a lot more runway than what we had several months ago. Yeah, and the good thing is it's showing the confidence of investors in the plan. The fact that they were ready to place this amount of money on Nissan is proof that the plan is solid. It's a plan that is robust, and that management, we were able of convincing the market with our strategy. Yeah.
On the details of how those funds are being raised, we heard about a syndicated loan coming from backed by the UK. Is that included?
It's not included in the 850 that we have raised already.
But conversations with the UK are happening.
We're looking at many options all the time, and we'll let you know if there's anything to add later on.
What could be the timeline for that?
At the moment, we are not in a rush to raise any more funds. We have, as I said, we have raised 850 billion yen, which is a very big part of what we had intended to do, and we are confident with this amount for the moment.
What about asset sales, especially these offices here in Yokohama?
Well, nothing to add on that. We initially looked at many options, but we haven't decided anything. We are in Yokohama. We will be in Yokohama always.
When it comes to the production here domestically in Japan, you are ending them in your flagship Oppama plant by 2028, right? Are we going to see any more closures or reductions here domestically?
Well, in Japan, as we announced, as I mentioned mentioned in the last announcement, we have finished with the vehicle production consolidation in Japan. Nothing else will be done on the vehicle consolidation side in Japan. We're still working on some other sites overseas. We announced also Cuernavaca, which was also a very difficult decision to do. But we are on track. We are almost done with the restructuring plan, and we are now in the stage of moving forward to the future, talking about product and launching all new cars here in Japan and overseas.
What happens to those plants, like the Opama plant?
Well, we will see what we do to repurpose them in the future. Nothing to announce at the moment.
Repurposing, but not necessarily selling it.
We're open to many options, yeah.
How's your partnership with Renault? The new CEO especially, he was saying he wants to see more partnerships globally.
Of course, I think, this time is one of the most exciting times for the alliance. From the outside, it looks like we are distancing from each other, but the reality is this is a time at which we are collaborating the most. We have so many cars coming. We started with the Renault 5-based Micra that we just launched, which was designed by Nissan, but is now produced by Renault. And this is just the beginning of several projects that we have been working on. And I've known Francois Provost for many years. We've been working together for quite a while. And we have both the same interest, which is keep building, win-win relationship between both companies and keep fostering the alliance for the future.
And that was Nissan Motors CEO Ivan Espinosa speaking exclusively with the Asia Trade co-anchor Serey. Cambodia and Thailand have agreed to gradually pull back heavy weapons from their disputed border and cooperate on landmine clearances. It's a step in de-escalating tensions between the two neighbors after violent clashes in July killed dozens. Thailand and Cambodia have continued to station troops and weaponry along the border more than 6 weeks after agreeing to a ceasefire brokered by President Trump. Despite the easing of tensions at the border, the International Monetary Fund recently lowered its growth forecast for Cambodia. It sees the country's economy growing just 4.8% this year, down from its earlier projection of 5.8%, citing regional tensions and trade policy. The U.S. last month imposed 19% tariffs on Cambodian goods. President Trump originally threatened to keep rates at 36% unless Cambodia ended its deadly border clash with Thailand. Let's get perspective from Chea, governor of the National Bank of Cambodia, one of the few female central bank governors globally. She has been with the institution since 1999 and assumed the top role in 2023. She joins us for an exclusive interview. Governor, good to have you with us. First off, when we talk about those 19% tariffs, is that impacting financial inflows in Cambodia?
Well, first of all, thank you, Haslinda, for having me. Straight to your question, not really. Cambodia, whether it's a good thing or bad thing, has a very small capital market, and so the inflow of capital into our country are mostly in the form of foreign direct investment, and these are the kind of investment that are not very sensitive to immediate outflow as a result of an external or an internal sort of issues. So in that regard, immediate outflow, no. Also, because at 19%, of course, we initially were very concerned with the 49% imposed that eventually subsequently reduced to 36% and now 19%. I think this is the same level as our main competitors, so the fear of seeing relocations of the manufacturing plants to other countries is a lot less now.
19% is still high. It is much lower than the initial 49%, but for an economy that's already struggling, it will impact how it does in the next months to come. I'm just wondering, what implications are there for the economy?
Well, 19% is not it is not as good as the free tariff that we used to enjoy. But having said that, I think it's also given opportunity for government to also speed up its reform, which one is to diversify its trading partners. Now the main trading partners of Cambodia are the US and the EU. Throughout the years, we are able to diversify away from in terms of destination diversifications, looking into the ASEP region and also within ASEAN. Our trade with ASEAN has significantly increased for the past 10 years from about 9% to 20% in 2024. We are also diversifying our products because Cambodia used to rely a lot on garments and footwear, which constitute about 70% of our export 10 years ago, and now it's about 52%. And we're looking at further reducing this over-reliance on garment and footwear, going to more value-added products. So, of course, there are going to be immediate impact from this high tariff, but I don't think it's going to be as significant, particularly as I mentioned earlier, our main competitors are themselves facing a similar tariff. It's also an opportunity to speed up, as I said, our reform in terms of diversifications of destination, in terms of diversifications of the type of manufacturing products that we export, but also to improve the internal structural reform. We just launched our new airport recently, and I flew in through the new airport. This is part of the reform that has also put in place to improve the logistic costs in the country. In terms of energy, we are known to have one of the highest energy costs in the region, but bear in mind that 62% of the energy supply in Cambodia are from renewable sources, and the government has the intention to increase it to 80% by 2035. These are the reforms that the government are very committed to.
Yes. Governor, you seem to suggest that Cambodia has avoided a manufacturing crisis, but we're also cognizant of the fact that China is dumping its cheaper goods in the country. How is that playing out?
This is, again, as I mentioned earlier, it's an opportunity, really, Cambodia, to look at its supply chain. We also very cognizant that we did import a lot from China, process it, and then export. The way forward for the government now is try to make sure that we are able to produce as much as possible within the country, and this is where some of the reform happened in terms of electricity costs. One of the reasons the main sort of source of supply are not able to set up in Cambodia is the energy, but with this reform, hopefully we will be able to attract those manufacturing plants to Cambodia and reduce this over-reliance in terms of supply chain.
In terms of bilateral trade with China, how much clarity is there? This is one market that's important to Cambodia. It is a major trading partner for the country.
We do import a lot from China in terms of construction material. We also rely a lot on in terms of foreign direct investment from China. Increasingly now we try to export more, particularly in terms of the agricultural products. This is something that Cambodia knows best how to do, and so we'll try to increase that. With the free trade agreement with China, we're also looking to increase this trade with China, and it's just not just a one-way import from China, but also export in terms of our agri-industry to the country.
We know that China is also the biggest creditor. We're talking about $4 billion. Is Cambodia having any difficulty in paying back its debt?
I think this is the misconceptions that Cambodia is super reliant on Chinese debt. In fact, Cambodia's government has capped its public debt to about 30%. And out of this 30% of public debt, I would acknowledge that about 50% of those is from China. So we do not struggle to repay the debt. This is within the limit that is affordable for the government. In fact, as the country is graduating from the low-income country to middle-income country, there are going to be some challenges in accessing to funding. At the moment, we rely a lot on concessional loans, but going forward, the government will also have to find a way to finance its budget, and this is where the effort to raise funds from the private sector. And as I was at another event just now mentioning about issuing government bonds on blockchain technology. We have done so on the primary markets at the central bank. What we're looking now is to issue it on the secondary market, where we would also allow the citizen to participate in this initiative and therefore open up and democratizing the bond market.
Governor, we know your currency has long been pegged to the US dollar, and you've been a proponent of de-dollarization. How important is that for that to happen in a more expedited way?
Well, I would say fortunately or unfortunately, 85% of our economy is dollarized. Now, the fortunate thing is that it's to bring confidence from investors into the country. So they, if you look at investors who can choose between investing in a local currency from a small country like Cambodia or US dollar, of course they're going to choose US dollar. So that has brought that confidence from investors. It also helped us stabilize our inflation rate. In fact, Cambodia inflation rate is very low at 1.6% as of July year-on-year this year. But the unfortunate thing is that we have very little independence in terms of conducting our monetary policy. A very good example recently is the high inflation rate in the US, where the Fed has raised their interest rate to dampen consumption and therefore lower the inflation in their country. Because we are dollarized, we now also have to face with a higher interest rate on US dollar. And this is something that is not beneficial for a country who struggled to recover from COVID-19 and the other series of unfortunate events that happened in the world. And so this is something that we're very much aware, and in order to increase the resilience of the country, particularly in time of crisis, we need to increase the use of our own local currency, because the central bank can only control the supply of its own local currency and not foreign currency. So yes, there's a pros and cons to this, and our effort to promote the use of local currency has been gradual. There's no immediate swift where we're requiring shifts or where we're requiring a bank to exchange all their dollars into local currency. Instead, it's a more persuasion approach and encourage people to understand the importance of their local currency and use it more.
Governor, thank you so much for your time today. Chea Serey, Governor at National Bank of Cambodia. Coming up, we'll talk renewable energy with Prime Infra's President and CEO and get their business outlook. Keep it here with us. This is Bloomberg. Welcome back. Some see an opportunity for the Philippines to ride the wave of AI-driven data center investments, but one study warned that's only possible if Manila can deliver on power supply and a policy framework to support it. Strait-based institute adds there can be no data center boom in the country if it cannot guarantee a power supply that is sufficient, stable, and clean. Let's get perspective on the Philippines' energy outlook from Guillaume Lucci, President and CEO of Prime Infra, a leading infrastructure developer and operator. Guillaume, good to have you with us.
Pleasure being here.
So I'm just wondering whether the Philippines' power energy is in line with its digitalization strategy.
Well, it's certainly in transition. I think we can call it that. It's in transition both in terms of decarbonizing and in transition also both in terms of achieving energy security and resilience. To your point, data centers do need reliable power, their baseload power, and they need affordable power. So the Philippines is going through a decarbonization program that has been launched by the government quite aggressively through the auctioning of renewable energy. And at the same time, there's been an enactment earlier this year of gas law that is here to drive essentially the development of indigenous gas to try to really protect or insulate the country from volatile energy markets and so on and so forth as we expand our gas presence and slowly decarbonize away from coal. So these two elements together should, over time, stabilize the energy matrix and potentially support the AI growth.
I suppose slowly is the operative word, because
Correct.
there's still issues with stabilizing the grid, for instance. I mean, when you
Exactly.
take a look at the target of 35% renewables, is that still intact at this point in time?
Well, so Prime Infra plays a big role into that objective, and the reason is to reach that 35% renewable, there's going to be a tremendous amount of variable renewable energy injected into the market. That destabilizes the grid, and one of the things that we are investing in is we're investing somewhere in the order of $7 billion US into pump storage batteries. So that's 2,000 megawatts of pump storage. It's large batteries that essentially capture excess energy from the grid when there is such excess energy, store it into a water reservoir, and then we'll release it when there is actually a lack of energy into the grid. So that process is necessary to enable the deployment of renewable energy at scale in the country. And that's going quite quickly. If you look at the numbers overall, if you look at Luzon, which is the main island, today we have about 20 gigawatts of installed capacity, right? Out of which 16, 17 gigawatts is what we call dependable capacity. For this objective to be attained in 2030, 35, and up to 2050, the Philippines has to deploy somewhere around 60 to 80 gigawatts of capacity, 3 to 4-fold. The absorption of this renewable variable energy into the matrix will demand tremendous amount of infrastructure like pump storage and others to stabilize the grid.
And of course, Prime Infra is trying to do its part. You're also drilling in Malampaya. I'm just wondering, what's the progress so far? What can be expected?
Well, so we're drilling 3 new wells. We're investing shy of $900 million into these 3 new wells, 2 development wells, 1 exploration well. As you know, we're a service contractor and doing so on behalf of the government, of course. We're the only operator in the country. That process is ongoing. I think we're all very anxious to hear what transpires in the coming weeks. We should have results, I think, within 3, 4, 5 weeks, at least on the first well. And there is a fundamental element, of course, of energy security. The government, through the enactment of the new gas law earlier this year, has promoted indigenous gas ahead of imported gas to really shield us from market volatility. Maybe I can give you a data point that I think is quite relevant. If you look at 2010 to 2025, more or less, you look at the JKM index that was around $14 per MMBTU. Malampaya has been just above 10 on average. So an extremely resilient number, and JKM peaked in 2022 at over 60. So I think if you tie this back to the desire to have stable energy, avoid volatility, of course, the exploration of indigenous resources is paramount, and we're investing heavily into that sector.
Malampaya, of course, is one of the acquisitions you made recently. The question is whether you are looking at further acquisitions and whether you need to IPO, possibly to fund that. The initial plan was for 2022.
That's right. Well, so in terms of new acquisitions, we've recently agreed to acquire a controlling stake of the gas assets owned by First Gen. That is still subject to, of course, regulatory approval. So we hope to close that transaction before the end of the year. That's 2,000 megawatts of gas-fired power plant and an LNG import facility. We'll continue with M&A, certainly, very targeted fashion, very disciplined, of course. But as far as the IPO, there is no IPO in the short term. We'll be raising capital through other avenues, particularly for our pump storages.
So very quickly, if you had an IPO, what's the earliest possible? Which year you think?
No horizon for an IPO.
Not for now.
Not anytime soon.
Guillaume, we'll leave it there. Thank you so much for joining us.
Thank
Guillaume
you.
Lucci, President and CEO at Prime Infra. Up next on Horizons, Middle East and Africa, an exclusive interview with Citi CEO Jane Fraser. That is it for Insight. Keep it here with us. This is Bloomberg.